Hello, I'm Asif Farouk of Finextra, and we're here today at Cybos 2014 in Boston. I'm with Mike Urban of Fiserv. So Mike, thank you for joining me.
Thank you for having me.
It's okay. So fraud in financial services has been on the increase lately. What are some of the tactics being used by fraudsters?
So a number of the tactics that criminals are using to attack the financial services really focus around digital channels. We've had the traditional card fraud, check fraud that continue on today, and what we're seeing is criminals using technology, particularly around malware, attacks over the internet, to be able to execute automated attacks against institutions and other organizations, including consumers and business customers at the computer level, to compromise credentials and to then go and execute fraudulent transactions.
Okay. What about mobile? Why is mobile so vulnerable?
So mobile is really just a computer. And if you think about computers over the last 20 or so years, personal computers, we know that there's an incredible amount of malware that's out there today, again, talking about these sophisticated electronic types of attacks. And so the computer is really just, the mobile phone is really just another computer, and so many of the similar attacks can be placed onto the phone. There's also generally a feeling that a phone, a smartphone in particular, is really like almost like a toy, right? So you may not think about the websites you go to. You may be downloading apps that could be pulling information from your phone that you don't necessarily want it to. There have been a number of apps that have actually targeted financial institutions and compromised credentials. So the mobile device is really a new tool to access, and I think as consumers and businesses get used to using these tools, they'll become a little more aware of how they're using them, and hopefully the technology will continue to increase to lock them down more. And I think we've seen that a lot very recently, particularly with Apple's new phone.
Yeah, okay. And let's move to the banks now. What can banks do to protect their accounts and their clients' accounts as well?
So what banks need to do today is to really take a look at the pieces that they have in place today to help to control fraud and take that information into a central hub. So rather than sort of targeting and focusing in particular areas and having those areas disconnected, they need to be able to bring all those risk indicators together into a system that enables them to have strategies that tells you that, hey, there's these different things going off, these different indicators are going off for this particular client. Their risk is going up, so that they can react more quickly in more automated fashions rather than having someone having to go in and research things and go to different systems to try and understand when something's happening, and to be able to get in the middle of the transaction. So you don't want to be chasing a fraudulent transaction after it leaves the bank. You want to be able to identify the risk as it's happening, and being able to hold that transaction before it goes out the door protects your customer and protects your institution as well, and actually winds up costing you less in resources to recover and manage the situation and the client impact. So I think that's really where financial institutions need to move. Mobile is only one channel. You're really looking at all of the activity that you have, all the different channels and all of your customers' activity, to be able to pinpoint where that risk is happening and be able to react to it and then prevent the loss in the first place.
Okay, well, thank you very much.
Absolutely, thank you.